Hey everybody, welcome back. It's been a while since I put out one of these updates. Before we get into things, I need to address a bit of a data error that we came across last month, which is actually why I didn't bother putting a video out because we wanted to clean up that data before revisiting all the stats and kind of addressing anything that I said before. So let's quickly take a look at what these charts look like, and I'll explain kind of where the problem came in. So last month when the data came out, I was looking at this chart, and based on the way that we had mapped some of the data on these graphs, it was my belief that active listings, we were at like the highest point we've ever seen. Now, what actually happened is if you look here, we've got new listings and active listings. So active listings is a cumulative total at the end of the month. New listings are just the new listings that were added or activated during that period of time. So what was happening in our charts is the new listings was actually getting placed in the active listing chart. So if I was looking at this chart here, which looks how it's supposed to now, all of this higher region was down underneath this 2000 mark. So it really made it look like the inventory levels that we're seeing right here had never been seen before. This is actually what I was expecting to see when I initially went looking for this data based on the 2008 correction back in the day. I figured inventory would have been higher. So now that we've got this chart corrected, there's a couple things. One, it's nice that we have an actual example in the past that we can refer to, so it's not unprecedented, which is kind of helpful. However, I don't think a lot of the actual end predictions that I've made are going to change outside of the fact that we've never seen this before, which is funny because this is when I got into the business back here in 2016. So all of this history I was referring to is before I actually even started paying attention to real estate. Anyway, so let's quickly go back here. We'll talk about last month's stats, see what things came in at. So sales activity continues to remain suboptimal, definitely down compared to 2024. We're down 23%. Marginally up over 2023 activity, but down almost 50% to 2022, 30% to 2020, even all the way back to 2015 when active listings was actually higher. Still, the sales activity is down. This is despite multiple rate cuts now, and we're probably going to see more rate cuts with everything that's going on right now. But I don't think, again, that that's going to change the outcome in our real estate market. So if we look at new listings, just over 1,000. Sales activity was just under 500, so just under the 50% mark there on sales to new listing ratio, which did climb from the previous month. Months of inventory fell a little bit, down to 4.7. I think the new listings was a bit softer than I was initially expecting for February. I do think we're going to continue to see this trend of new listings outpacing sales at least 2 to 1, if not 3 to 1, as we head into the spring market here. The one thing, the average price is still really holding, which we'll see how long it can continue to hold for. Sellers are definitely hanging tight when it comes to what they're willing to let their properties go for. I still believe we're going to see a lower price overall by the end of the year than we're looking right now. And let's take a quick look at charts and trends. So let's do sales activity first. So here's our kind of normal sales activity. Again, it's always pretty repetitive. Last few years, a clear downward trend in volume. Okay, lower highs, lower lows, which again could create a case, or a narrative for pent-up demand and really rebound here in the sales activity side. I don't think that's going to happen. I really don't. I still think we're going to have a more traditional or a more similar year to the last couple of years, where after the first few months of the spring inventory, things peak and then that summer lull hits. I'm still anticipating we're going to see that happen again this year. New listings, again, very predictable type of charts here. December is usually always the bottom. Peaks are usually in, it's kind of a weird year, but most times it's in the spring or early summer that we see new listing activity peak. So this number is likely going to shoot up. It's usually like 150 to 250% of that bottom there. So, I would not be surprised if we're touching up on this line anytime soon here with the spring market right around the corner and nicer weather on the horizon. We'll go back to that average price chart here. So today we're pretty similar again to some points, in 2021. So 4-year span, market's pretty much flat. It's been up and down since. I still think it's very possible we can continue to see this play out here easily in the next 3 to 5 years, possibly longer. And this is, in my opinion, regardless of what happens to interest rates. I really think that if interest rates fell to 0% tomorrow, sure, you might see that little bump. Don't get me wrong. But I think just as quickly as it could go up in terms of activity, I think it will fall just as quickly on the back half of that bounce. We've seen it before. And I do think that if we do see that where rates get very, very low again, activity could pick up for sure. But for how long? And, is it enough to really deplete the amount of inventory that we're seeing? Months of inventory is certainly up there. I don't know. I think it would take quite some time to get this depleted. And I really still think all of these factors contribute to negative pressure on this average price. Again, some principles to keep in mind. Entry-level inventory will have a safer floor when it comes to price based on the fact that there's more demand for that type of product, right? So like your first-time home buyer, detached home, even like low-priced condos with reasonable fees, things like that are going to continue to hold a pretty safe floor. It's that upper end inventory when we get into, the $1 million new builds plus and stuff like that, where there's way less people who can actually qualify for that type of product. I think that's where you're going to see a lot more price correction. But we'll see. We'll see what happens here. Obviously, a lot of uncertainty going on with people really concerned about tariffs. So we'll touch base a little bit on that just so you guys can kind of hear my opinion on it. I know it's a bit of a hot button for everybody. Here's what I think. In my opinion, tariffs are nothing more than a scapegoat. Okay, so basically, it's an easy thing to blame our current situation on. Anybody who's been watching these videos for the last couple of years knows that the market hasn't been necessarily thriving over the last few years, and we've talked about a lot of different problems. All of those problems are still here today. In what do we got here? Today is the 7th. In about 3 weeks' time, our carbon tax in this country is going to go up another 19%. It went up 23% last year. It's going up another 19% this year, and will continue to go up every single year by $15 per ton or something up until 2030. So on one side, we're getting upset about a potential tariff that has already come and gone away within a 48-hour period multiple times in the last 2 months. Yet nobody seems to be upset, or at least not enough, or the same amount of people seem to be upset about the fact that we're going to continue to tax Canadians more just in a few weeks here. So it's a little ironic to me for sure. I think it's just the hot button. It's easy to blame somebody else instead of pointing the finger inward and addressing how we got into this point. And taxation is a big part of it. Taxation reduces affordability for the average family. The more we're taxed as citizens, the less disposable income people have. Less disposable income people have, obviously, the less they can contribute to the economic drivers and society as a whole. So, I mean, that's just a little nutshell of the problem. But in my opinion, the tariffs really aren't the thing to worry about. The tariffs could be here, the tariffs could not be here. It's not going to change the situation that we're in. We're still in a little bit of a boat with a leak in it. And, I think we're kind of worried about some of the other boats around us when we should really just be focusing on fixing our boat. So that I'll leave that there for now. Obviously, it's going to impact things like the bond yields, interest rates that we're seeing. So, of course, the bond yields have been coming down with kind of this game that's been going on for the last couple of months, which has put negative pressure on the 5-year fixed rate. I'm starting to see some 5-year fixed rates with 3 handles in there. So like 3.99, I think CIBC was posting the other day. Bank of Canada is expecting now to potentially do another cut of 0.25% on the overnight rate. Another thing to keep in mind, though, like let's go back to that price chart real quick. Average price today, $639.46. Average price April 2021, or even March 2021, $634, $643. Okay. Bank of Canada interest rate over here, 0.25%. Bank of Canada interest rate over here, 3.0%. We are 10x plus higher interest rates here than we are here, yet the average price is the same, yet inventory is higher. Again, it doesn't make sense that we're going to see this return to all-time highs. I do still continue to see a lot of industry chatter about how certain things are going to cause the market to go crazy. I don't know what to say. Like, it's like, the most optimistic scenario always seems to be the most popular, and I get it. Like, I'm not here to doom and gloom everybody. I'm really here just to make sure that people have a balanced approach when they're giving advice to people on arguably the largest, purchase they're going to make in their life. I think there's too many people that get forced into situations where it doesn't make sense really, but for whatever reason, somebody is, trying to collect that commission check, whatever it is. I can't speak to, 2,000 different realtors out there, but you got to have these conversations with people. At least I do anyway, so that I can sleep at night without knowing I'm screwing people over. So, obviously do what you guys got to do individually, but it's important, I think, for people to consider these things, and especially see them on a visual aspect so they can kind of start to understand that, hey, like, what happens if I buy a house today here and in 4.5 years time, it's worth the exact same price I paid for it? As long as they're okay with that, great. And if it, especially if it means like they're changing their life in a way that it's going to benefit them, right? If they're, an old person with bad knees, they need to get out of their 2-story and get into a 1-floor home. Of course, that's going to make sense because it's going to change their quality of life. But they should still be aware that whatever it is they buy today, there is a chance that it could be worth the same today as it will be worth 4 or 5 years from now, or who knows, maybe longer. It's so hard to make accurate long-term predictions. But the point is, we have the precedent already here, right? And I don't see us having a narrative that supports this without drastically changing things in this country in terms of how we produce, anything really. Definitely need to become more of a resource powerhouse, something. I'm not claiming to have all the answers, but we are very debt reliant in this country, and it just doesn't make sense without some kind of miraculous change. So again, that's my personal opinion. What else we have for you? A couple of other things just to take a look at here. One, continuing to see trends like this, especially in the GTA area. There was another one just last week, I believe. This article's from February. But a lot of different new construction projects that are nearing completion that are going up in flames. And it's funny, they're like, somewhere in here it said something along the lines like, it seems suspicious. Geez, what was it suspicious about the guy throwing gas on the house with a jerry can? Like, yeah, it's suspicious, or you think it's arson? Like, it clearly wasn't, like a bad wire in the house going up or something. So I don't know why the mainstream media can't just come out and call this for what it is. This is clearly people who have over leveraged themselves. I don't know who they are. Honestly, who knows? Could be realtors for all I know. There's plenty of people who speculated and put down deposits on, sometimes multiple units like this, and now those units are coming to close. They can't, they for one, they don't appraise for 80% of what these people paid for it a lot of the times. They can't assign it because nobody will buy it, rightfully. And a lot of these people weren't planning on closing when they put the money down on these. They always planned on assigning it and making a profit. Well, so now they can't get financing. They're going to lose all their deposit, which many of them are hundreds of thousands of dollars. So what other options do you have left other than burning the project down and getting the insurance money out of it? And we continue to see stuff like this happening without anybody really calling it for what it is. So 100%, this is what is happening. And I think we're going to continue to see trends like this if affordability really becomes a factor and people are in these pinches, right? So, and it's another reason why I think we're not going to see a return to this, because all down here, everything was like gravy, like prices only go up, real estate only goes up. This is where the pain happened. Now we've got a pretty recent point in time where a lot of people got screwed or are getting screwed. And that isn't going to just disappear overnight, where the sentiment changes and we go back making the same mistakes again. I really don't see that happening in the short-term future. So all of those things contributing. If you look at the GTA market, they're already seeing like record-breaking levels of inventory. A lot of the inventory they're seeing is relists from last year. So it just keeps stacking and stacking. And of course, if prices come down in Toronto, it puts negative pressure on smaller markets like London. So we will see. Anything else I wanted to touch base on? Let me check my notes here. I think that's pretty much it. Again, in terms of predictions, I think we're going to see rates continue to fall. I think inventory is about to skyrocket in terms of spring market being right around the corner. Yes, sales activity will pick up. Don't get me wrong. We will see this number continue to climb, but I do expect it will peak sometime in April, May, June, and then I'll be on a downward slope for the rest of the year. And I expect active listings to continue to climb. It's really been building here for a while, and I would not be surprised if we get more into this range in the spring and the summer markets here, with everybody trying to do the same thing at the same time. So hopefully that helps, guys. If anybody ever has any questions or they need help really kind of understanding a specific situation, feel free to give me a shout. Always happy to help kind of brainstorm or do some analysis work for you guys. Okay? All right. Happy selling, guys. Take care.